Hey guys, Bitcoin has pushed up considerably to around 20.8k, whereas finally facing some harsh resistance after about a week or so of extreme upwards moves. Ethereum has matched it, the total cryptocurrency market has matched it, and obviously all altcoins, of course, have matched that move as well. But again, we're finally facing some big resistance as we head towards the 2nd of November, which of course is the FOMC decision. Now, we've previously listed 20.8k as a major resistance zone that we need to be taking in order to look at short-term to medium-term buying. However, as we get very close to FOMC, there are questions as to whether this is a fake out or not. Let's get into it. So I'm going to keep it short and sweet today because there's really not much to cover. There's no need to overcomplicate it, I should say. We've moved up 20.8k, major red resistance box. As you can see, 20.8k is also an area in which the bull market support band, which is this orange kind of resistance band here, made up or comprised of a 20-week SMA and 21-week EMA, is lurking above. So we've got major horizontal resistance for this entire range since around the start of June, and we've got the bull market support band in this region. Yes, we have broken out of the triangle, the blue triangle in the shorter time frame. We have broken out, as you can see there, we've broken out of the RSI triangle as well. If we go to the 3-day chart, which is probably a good chart to look at in this kind of thing, we've also broken out of the 3-day downtrending RSI line. Let's go ahead and amplify this so you guys can get a good view of it. The 3-day RSI downtrending resistance line is stemming all the way back here from January 2021, so it's almost 2 years long. We have broken out of that decisively now, and we will be seeing a 3-day candle close in 19 hours, which will actually decisively break out. So I suppose right now it's still pending. If we come all the way back down and we close at 19k flat on this 3-day candle, then it wouldn't actually be a breakout, but it seems likely that we will get a breakout there, which is undeniably good. So there are things that are undeniably good. We broke that RSI line on the daily, we broke the triangle on the daily, we broke on the 3-day, we broke that downtrending RSI line as well. There are things that are very undeniably good. The question, however, is this: is this good? Is this good price? Is this bullish price action, or is it just a fake out? Right? Because we generally see moves like this before FOMC. So let's try and answer that. So firstly, what you can see, and I've gone over this stuff before, I'm just repeating myself here, we've never bottomed out ever at all. Not once, ever since 1970s. Not once have we ever bottomed out on the S&P 500 while interest rates are hiking. Interest rates will be hiking, not only in November here, in the next 4 or 5 days, but also into December, into January. The market expects interest rates to keep hiking. Now, it does expect them to slow down. For example, we'll see a 75 basis point hike according to the market in November, and then a 50 basis point in December, and then possibly a 25 in February. But the point is, the rates will still be going up. And as seen by the historical data here on this chart, orange lines being interest rates, and this up here, this price action being the S&P, we've never bottomed out while interest rates are hiking. So there's no need. There's actually no evidence at all, zero evidence at all, to suggest anything other than a early to mid, probably mid 2023 bottom for the S&P 500. And looking at DXY, for example, DXY, yeah, it's correcting. Yeah, we're seeing a pump on Bitcoin and the markets because of that. But generally speaking, again, if we went up and plotted out all the interest rate hikes on the DXY chart, you'll see that every time we see a hike, we see a pump. And it's the same thing with the bond yields. Every time we see a hike, we see a pump, right? These things don't top out until interest rates have topped out and started decreasing. So I would be inclined to believe that all of this right now, everything we're seeing right now, is just short-term fake out. And I would be inclined to believe it's just a dead cat bounce. That's personally what I'm inclined to believe. I don't even need to dive into it further than that. That's all I need to say. All I need to say is this: the S&P 500 has never bottomed out, ever, not once, while interest rates are hiking, and interest rates will most likely, according to the market, be hiking for at least 3 to 4 more months. Okay, so quite simple. Okay, there's really nothing to debate there. And so with that said, extrapolating that over to Bitcoin, it's like, well, what's likely here for Bitcoin? Bitcoin follows the 4-year cycle theory. The 4-year cycle theory says a Q4 bottom, okay? We haven't seen a Q4 bottom yet. We haven't retested the 17.5k lows. The S&P bottom is not in, according to every single fraction of data we have ever. The DXY top is not in, according to every single fraction of data we have ever. Same with the bond yields. So do we expect Bitcoin to magically pump up here and just go upwards? Or do we expect Bitcoin to be in a fake out? I'd say we expect it to be in a fake out. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Mega Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks, guys, for watching the advertisements. Let's get back into the video, right? With that said, though, we can't just deny price action. We can't just ignore TA. But what I'd say to you is this. My buying plan on Bitcoin is quite simple. My buying plan on Bitcoin has been this here. So look, I'll scroll up and I can show you the buying plan. The buying plan has been this. If we get a daily candle close above 20.8K, the buying plan says buy 50%. I would actually encourage people to not do that until after November 2nd. Because I am under the impression here that, the buying plan's still active. It's just on pause until November 2nd. That's what I'd encourage, right? Look, 20.8K is a major resistance. There's no doubt about that. It is a major resistance, especially because of the fact that the bull market support band is there as well. We haven't broken above the bull market support band at all, basically since the peak in November, aside from a few days here in March 2022, which was a fake out, right, within a ascending channel formation. I would say the buying plan is still active. 20.8K break above is still active, but I would honestly just encourage people at this point in time, and this is from my personal risk tolerance, right? I'm a very conservative long-term buyer. I'm slightly more aggressive as a trader, but generally speaking, with long-term buyers, I'm quite conservative. I would encourage people to take a step back from the market until November 2nd, until that interest rate decision happens. Unless we get some crazy pump, all of a sudden we're up here at 23K or 24K or something, and then it's obvious that we will continue to go to the upside. I just don't trust this. Look, we're at major resistance. Bull market support band's hitting us. This is all fake. It's a fake bottom on the S&P. It's a fake top on the DXY. It's a fake top on bond yields. We're still going to be seeing rate hikes. We've still got the Q4 example for a Q4 bottom. Look at these previous rate hikes we saw, for example, in May. Rate hikes have the potential to dramatically swing the market. In May here, it triggered a downwards move. Basically, 57% downwards move, that FOMC decision. And same thing here, back in June, it triggered a final drop of around 23%. It doesn't look big on the chart, but a 23% drop is massive. And if we plotted out a few more, I'm sure we could find some more. Those are two ones that I remember being notable, so I just plotted them out just then. I think that, we're going to see some major price action based on FOMC. It's no surprise. I mean, we've gone over extensively, we've covered in the past. Bitcoin's very compressed right now. In fact, on the 3-day chart, for example, the Bollinger Bands are the tightest they've ever been since around, I know this is about a chart example to use here, but since around June 2020, we haven't seen Bollinger Bands this tight since June 2020, right? So very compressed, and FOMC will be the trigger for that price action. Now, if FOMC comes in, and it comes in at, say, 75, that would be an instant buy signal, of course. But if it comes in at 75, it's like, well, that's not really evidence for any bullish price action. So I don't know. Bitcoin's in a confusing position right now, guys. There's really no other way to put it. We've broken out of a triangle. We've broken out of RSI resistance on 3-day and daily. We look good. S&P looks okay. But when you actually take into account the macro and how the macro affects these trends, and you take into account as well, Ethereum's at resistance, red box resistance on Ethereum, total cryptocurrency market cap, same thing, triple, like 2 diagonal lines resistance and a horizontal resistance zone as well at 965 billion. Something about it it doesn't sit right with me. I don't like, I'm not going to get people in the comment section, Wolf, you're going to end up buying at 30K. It's like, well, I don't know, man. Look, I just don't, I'm not going to sugarcoat it. I just don't like the look of this. I think this is a fake out personally. If we get into FOMC and that happens and goes by and passes, we're still moving upwards, sure. I still consider, it's very important to note, this buying plan, in my opinion, is still active. I still consider it active. I'm just putting it on pause until after FOMC. And I think a lot of analysts will agree with me on that. Trading into FOMC, especially making long-term buys before FOMC while you're at critical resistance, just doesn't really make sense. It's 4 days away, 5 days away, 4 days away, whatever. Unless we get massive moves up to the upside right now in the next few days that make it so clear that Bitcoin's going to move up regardless of what happens with FOMC. It's like, I don't know, man, it just seems pretty rough, and especially considering the fact that this daily resistance has proven itself. We saw, let's just delete everything right now and we'll bring up 20.8K resistance horizontally. We saw a wick above 20.8K. and we came back down, hit bull market support band rejection, and we closed below it. So it's a strong resistance. It's proven itself already. So I don't know. I'd be cautious here going into FOMC. I still think the buying plan is active. If you're a high-risk trader, you can follow the buying plan. I personally, I'm speaking about my personal opinion. If you believe in that buying plan, you want to follow it regardless, you can do that. But I personally will be waiting for FOMC before making any major decisions on Bitcoin. That's just my opinion. And keep in mind as well, this is from someone who doesn't really care about long-term buys. I'm a trader. I don't make much money from long-term In fact, I don't care at all about my Bitcoin long-term bag. It's there for security, not for making money. So I'm a trader first and foremost. If you make money via long-term buys, and that's your only source of it, whatever, you might have a different opinion than me, or you might have a higher risk tolerance, whatever, that's up to you. I still think the buying plan is active. I'm just saying, personally, as a conservative long-term buyer, I'm not willing to make any big moves here until FOMC or until something dramatically, until something dramatic really proves something. I just don't think that's happened yet. That's my opinion, guys. So thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.